Two big stories really dominating the global financial markets at present. That's the ongoing situation with Greece and potentially trying to come to a solution with their creditors to try and avert the exit from the Eurozone and the Euro currency, and then also the severe sell-off in Chinese equities as well. Looking at Greece after the surprise referendum results, where there was an over-resounding support for no to further austerity. The Prime Minister there, Tsipras, has now come out with a new package which looks very similar to the one they sort of rejected. That's been passed by the Greek Parliament, and now it's just waiting for the Eurozone to see if they'll accept that and put that into place so they can get some further bailout funds and look to try and recover from the dire economic situation the country's in. Despite some reasonably strong opposition, it does look as though there will be a solution found to this problem, and Greece will remain within the euro. Looking at the dramatic sell-off in Chinese equities, there really was quite a severe sell-off there, around 30% in a month. Most of it has been sort of focused on the small cap stocks, but still a pretty dramatic sell-off. And the Chinese authorities have taken some pretty extraordinary measures to try and curb this extraordinary sell-off, with potentially around sort of 60 to 65% of the share market now frozen, with no sales able in those shares. So by banning the permitted sale of those shares, it has arrested the sort of fall on the sell-off. And for the last couple of days of last week, there was actually a small rise in Chinese equities. Now it'll just be interesting to see if we can actually gain a little bit of momentum there and sort of look to push on. It's interesting that still quite a few of the major sort of investment banks around the world are still predicting still reasonably high closes for Chinese equities towards sort of year end. So no sort of broad panic at the moment. All this is still against a backdrop we're potentially looking for a rate rise in the US. Certainly the data coming out of the US is still showing a reasonably strong economy. Pretty good employment data coming through, and there's even signs of a little bit of inflation creeping through as well, which is obviously good for the economy, and potentially those sort of rate rises coming through maybe September, October of this year. New Zealand dollar still under a little bit of pressure and probably will remain so, especially if we expect these further interest rate cuts to come through here in New Zealand. Contrast that with New Zealand, we're still looking for a further rate cut now at the meeting here in July, and potentially another further one maybe September, October of this year as well. That's turned around pretty quickly from sort of rate rises and sort of higher rates that were sort of forecast at the beginning of the year. Now obviously that puts a little bit of pressure out there on the income generating assets of term deposits to sort of fall in with these sort of rate cuts. There's still some reasonably good income options out there in the share market with these high dividend shares and some of the property trusts, etc. And so if you're interested in those, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. We'll look forward to speaking to you soon.